Okay, Wall Street getting an AI wake-up call. The sell-off began after news that Anthropic is adding powerful new legal drafting and research tools that could replace tasks many thought were safe from automation. That news is wiping out $300 billion in software and data stock value, but Nvidia CEO Jensen Huang says not so fast.
There's this notion that the software industry is in decline and will be replaced by AI. It is the most illogical thing in the world, and time will prove itself. If you were a human or robot, artificial general robotics, would you use tools or reinvent tools? The answer, obviously, is to use tools. That's the reason why the latest breakthroughs in AI is what? Tool use.
Okay, kind of a philosophical discussion of tools there, Mike Lee, but I'm guessing you're kind of in Jensen Huang's camp. This sell-off may be overblown because we're thinking too fast about the demise of software. What do you say?
So, you know, I've been doing this since 2001. It's when I started working in investments. This is easily the stupidest narrative I've ever seen on an exponential basis. Right, to assume that because Claude Code is spectacular or because AI is coming, that you're somehow going to replace Microsoft Office and all the way it fits into your enterprise, or ServiceNow or any of these other, you know, there's probably some software companies like HubSpot, like some software companies that do things on the fringes that are not that valuable, are going to have some threats come to them. But it's insane to think that, like, because you got to believe these software companies just stand still. While a corporate enterprise, an enterprise client is just all of a sudden going to bring in some people who are AI experts that can duplicate all their software needs in-house just using AI, and these software companies are just going to stand still and not use those same AI tools to make their products infinitely better, more valuable. Like, why wouldn't you?
Can I push back a little bit?
Yes.
Just a question. On the margin, the question is, I think about if it starts to eat into some of their business and impact profitability. So yes, if I'm a software as a service company, I'm not just going to sit back and let AI eat my lunch. But I think is the market, and this is a question, trying to figure out if on the margin it's hurting incremental revenue or incremental profit, I then have to rethink what I am worth. And I might be worth 15% lower than I was pre-AI. Is that what the market's trying to figure out, just valuations? What now is the company worth? If you're not going to sit back and do nothing, but if you take a little bit of a hit on revenue and profit, you're worth a little bit less than you were yesterday.
Sure, that's a very kind of, like you put that very eloquently, and it's reasonable. What's happening in the stock prices is not that.
Okay.
It is a run for the exits. These companies are all going out of business. I can't believe you own them. It is an insane overreaction, and the likelihood is that if you're a smart enterprise, you're using AI to eke way more value out of these SaaS products. All right, and just to give you a good example, if you look at Blackstone stock, just getting absolutely crushed because a lot of their funds hold debt against SaaS companies. Okay, why do SaaS companies lever up? So software as a service, you have long-term contracts at ultra high margins, right? So it's the most valuable revenue stream kind of in the marketplace. So why not lever up against it? Because like you make more money with debt, right? So Blackstone stock just got absolutely destroyed yesterday because of the holdings in some of their funds, which they don't own directly. Their fee income may come down because some of those loans may not be worth or default. I think the likely scenario is that companies use AI to eke out way more value from these SaaS companies, and these SaaS companies' delivery gets much better, improving profitability and revenue.
But are these guys, Jackie, does this look like these guys are all getting like destroyed or wiped out? I mean, I know NASDAQ was down, what, 2.5% yesterday. It's down 2% today. But I mean, that to me that's not destruction. Or if it is, it's a very small kind of destruction. But these markets have been flying pretty high. So are we also overreacting to the fact that you've got a pullback in the market where people are trying to sort through who's going to have some of their margins eaten up and who isn't, right? That's uncertainty, and the market's reacting to it.
Yeah, I think that's a pretty normal thing that happens in cycles, especially when you have new technology added. I think your point is correct that the markets keep going up, 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 and so people are used to that. So you have a couple of days of selling, and all of a sudden, people get nervous. If we can put up a Microsoft chart for the last 6 months. If you can get that up for me, you can see, Mike, to your point, how much Microsoft has come down. I mean, this is one of America's darlings. And if I were looking to invest, I would say to myself, I would use this as a buying opportunity, because these are people selling that hear, the panic. Let's see, this year. Well, okay, all right, it's still down 15.
Yeah.
It's still down 15% to just give you a sense of what's happening to Microsoft. And look at my darling Nvidia.
Oh, they threw Nvidia up
down
there, too. Why did they do that?
7.5%. I think this is still a buying opportunity, Mike, for these stocks, for people who really understand what's going on here. When we throw these headlines out, there is fear that goes into the marketplace, and I think people overreact.
Yeah, ServiceNow, okay, SaaS company growing at 22, 23% per year. They're they fancy themselves as the air traffic controller of all your AI processes. Stock is down 40% since October.
Yeah.
Right? And they beat earnings, beat estimates, raise guidance. Like there's this panic that, again, I think a lot of these AI stocks are wildly undervalued because of how little Wall Street understands about them.
Kennedy, I don't want to monopolize your time. My comment, and you can pick up, is that's my worry. Is Microsoft and ServiceNow beat and raise, things look good, and the stock's still selling off. And it could be because Wall Street is not understanding it, but I'm also worried that if the market's thinking 6 to 12 months out, the market, it's not reacting the way it should. So is it overvalued now, or is there something on the horizon that makes the sell-off, or is it just pure momentum? Is it just getting out and asking questions later, which is disconnected to fundamentals? But when you've beaten a raise and you're still selling off 15%, that's what more concerns me.
Okay, so you have a lot of these companies that are doing business with each other. And that's where the overvaluation is coming from, because they're taking the same money and they're doing deals together. And part of it is so some companies can go, we are in AI. And then investors go, well, we like AI. AI is great. Meanwhile, there's a big difference between AI models and what AI actually does. And so a lot of consumers, a lot of lay people use generative AI. And that's like Ask Jeeves. It's like you type something in, it's like, where is the most cobalt in the world? And generative AI will go, here's the thing you're looking for. I've got 3 ingredients in my fridge. Give me a recipe. Here's generative AI. Here's a casserole. Well, the problem is Claude moved from generative AI to agentic AI. Now, agentic AI can actually think. It can actually anticipate what a customer needs and what avenues to go down based on the information that it has. It is not agnostic. It is picking sides, and it is doing it very quickly. So it's like hiring someone who's just out of school with a computer science degree and plugging it in 5 minutes, and then all of a sudden you can build your own apps. You can build your own websites. Yeah. So that is making some of those companies obsolete. And because I don't know if we can use the term circle jerk, but that's what these big AI companies have been doing with each other.
Uses it all
there
the time.
has been
You're fine.
an overvaluation. Is it a bubble? No. Is the market reacting like it's a bubble? Yes. Is it necessary to have corrections every once in a while?
Right.
Absolutely, but the market has been very irresponsible in doing its own due diligence to figure out what these companies actually do and what goods and services they can provide.
All right, we got to leave it there. The roller coaster can go up very fast. It can go down very fast because there's a lot of creative destruction happening in the market, and that is probably a good thing.